Hello and welcome to the Forex Form Guide. I've subtitled this episode The Deep Breath Before the Plunge. If you've been following the channel for a while, you know exactly what I'm talking about. And of course, if you're a fan of The Lord of the Rings, you know exactly which scene I'm referring to there. On my favorite currency, the Aussie dollar, we are sitting at that final tipping point before what I expect to be a significant plunge in the market. It's an exciting time, it's a nerve-wracking time, and it's potentially a life-altering time as well. I'm going to walk you through it on the Australian dollar. I'm going to confirm the dates that I have already given in previous videos, and I'm going to give you some specific price levels as well. Now, in this episode, we're going to start with the US dollar yen, then look at the euro and then the pound, and then we're going to spend the bulk of the lesson looking at the Australian dollar US dollar because that's where I want to share the most information with you. In my opinion, this is going to be the best episode of the Forex Form Guide that I have done, regardless of how the Aussie dollar pans out in the next 5 weeks. You're going to see some techniques in here that I haven't spoken about before and I probably won't be speaking about again. So grab yourself a drink, preferably of the non-alcoholic variety, strap yourself in, and I hope that you enjoy it. And above all, I hope that you find it helpful. If you're new to the Aussie Dollar Man channel, welcome. It's great to have you on board. This channel is dedicated to the works and teachings of the great W.D. Gann. You can learn more about him on the channel. And if you are new here, there's some videos on a playlist at the top to help you get up to speed quickly. And if you find some value in this or any of my videos, I'd really appreciate it if you could click on the like button, leave a comment, and subscribe to the channel. I expect this strong trend on the Australian dollar to continue over the next 5 or 6 weeks, and I will be commenting on that throughout that period. So if you'd like to keep up to date with that analysis, you might like to subscribe to the channel as well. Before we get going, a quick disclaimer. This video is for educational and informational purposes only and should not be considered financial investment or trading advice. I'm assuming that you have a trading plan, that you have done your own research, and that you can make your own decisions. If not, then trading is probably not for you at this time. You've got a bit more work to do. Bottom line there, do your own research. This is not financial advice, and above all, trade responsibly. So we'll start with the US dollar Japanese yen. You can see on the daily chart down here, that's about 3 weeks, of sideways, choppy, awful trading there. It's starting to look like this run down here is going to pull up, maybe on the 62.5% level, but that it's going to pull up and have a third leg to the upside. We're coming off triple bottoms here. I've said plenty of times over the last 4 or 5 months, I don't think those levels are going to hold. I think they're going to be broken. I expect that we're either going to drop from here or we might run up and hit that trend line from the top there. But I expect that these triple bottoms will be broken and this market will sell off. Personally, I like that 144 level. I reckon that's where it's going. If you're a safety in the market student, you've probably worked that out already. But I think from these double tops here, that would be a really good target there on that 144 level. There's a few things going on at that level that I think are worth checking out. So 144 for the US dollar yen. If we look at the euro US dollar now, you can see that 119 level that we've been speaking about is still very much in play. And we now have a new set of milestones or a new range here that we can run and project forward. And 100% of that range, again, locks in on that 119 level. So all roads are pointing to about 119 on the euro at the moment. Now, this last run up was 9 days. If we run up 9 days from here, that's going to take you into early September because these are trading days over here. So that's almost 2 weeks there. That would take you into early September. If I was long, it would be a target. If I was not in the market, I would be looking to either trade long into that or I'd be waiting to see how the market reacts when it gets up to that level. So 119 looks like it's worth watching on the euro US dollar. And to be fair, it looks like it's a pretty good chance of getting there as well. That would give you a slight false break of this top over here, so double tops with a slight false break, and could be a really good trading opportunity as well, especially considering it's been running up all year there and it is due for a pullback. So if we do see a top at 119 on the euro, then it is likely to be a final top for the year. So we'd call that a yearly top. So there you go. We've got nice tight price clusters on the euro US dollar and the US dollar yen. We're 2 from 2. Let's see what we can see on the British pound against the US dollar. Firstly, there's a very similar setup here to what we saw on the euro. You've got a repeating range target there up around 138. We had a decent top back here at 138, so it could just be a case of breaking that old top, giving us a false break double top and a nice trading opportunity there. Interestingly though, if that were to happen on the pound and the euro, it's going to take a little bit longer. I've got the 27th of August on the Australian dollar. It may be a little bit later than that for the euro and the pound to reach those levels. Now, I treat each market individually. The forecast dates are just to get me to the starting line. When we're getting around those dates, then I zoom in and I look at my wheels within wheels analysis, which I'll talk about a little bit later and I have spoken about in other videos on the channel. But for the time being, that's an area that I can see. If we go a little bit higher than that, just out of interest, there is a really nice tight cluster up here. There's a couple of 100% range repeats and one 200% range repeat right up at that 148 level, just below 149 there. So if we do get a bit of a wriggle on this market. Massive cluster up there, 149. Okay, now that's a little bit further than I think the euro, for example, would run, and definitely the Aussie dollar would run. But you will see this with the currency markets where they are all following the same sort of patterns or cycles or turning dates, but one of them will make much larger ranges than another and have a really good run than the others. That has to do with the law of vibration and the different phases of the market and where we're at in that phase, and the different anchor points for your law of vibration cycles as well. And of course, as Gann says in that Ticker Investment Digest article where he spoke about the law of vibration, that each market does have its own vibration there. So 138, I think, would be the target there. But if we push on there, there's a really good chance up around that 148, 149 level as well. If nothing else, that's the kind of price target that you just put in your alerts somewhere. You forget about it. And then 6 months from now, the market's up at that level, 145, 146. You have an alert, you bring out that chart and you go, oh, okay, 148, we're getting closer, and you can start targeting it. For the time being, it's not really relevant to our discussion. And that brings us to the Australian dollar, US dollar, the deep breath before the plunge, as I said earlier. This particular area that we're approaching comes from the Ticker Investment Digest article where Gann spoke about the law of vibration. And I've done a video on that on the channel. If you're not familiar with this, it's well worth your time to listen to or watch that 18-minute video there to learn a bit more about the law of vibration. But Gann spoke about the law of vibration, telling you how each phase of the market is going to unfold. So is it going to be choppy and sideways? Is it going to be strongly trending? Well, this particular phase that we're coming up on is a very strongly trending market, and I have reason to believe it'll be strongly trending to the downside. An example that I gave on Thursday with my midweek quickie update on the Australian dollar was Tesla. We saw a move like this earlier this year as Tesla fell apart there. That's the kind of thing to look at as an example because firstly, the top came in on Tesla last year in December, but the big crash conditions didn't kick off until late January, early February, and then the market started to fall. Once it started to fall, it was pretty much downward pressure all the way, and all the news was bearish. It was bearish news after bearish news after bearish news. That's actually what triggered me to it. I thought, gee, Tesla's getting hammered here in the news. I wonder what the law of vibration says on Tesla. So I did a little bit of work on it, and that's what I found there. It's a similar sort of move to the Australian dollar. I'm expecting that really strong fall on the Australian dollar, but time will tell. We'll look back in October and we'll see what happened on it. Look at the move during the crash. It drops like a stone, basically, but you had opportunities on the way. There's some little lower swing tops there. You had a decent lower swing top there. So if you're trading it short, and then the market puts in a lower swing top there, there are opportunities to compound on the way down. Another one down there, another lower swing top there before the end there. It won't just be 5 weeks of down bar, down bar, down bar. There will be those pullbacks. So what people often do in moves like this is they'll get short and they'll get short again, and then it gets all the way down here and their trading account is showing a really big unrealized gain, and they think, oh, I'm going to smash it, and then they margin themselves out to the full at this point here, and then the market has a pullback. Now, compared to their initial position, the pullback is nothing, but because they've loaded up on positions here, and I've done this myself, I've seen others do it, and then they'll either get a break even or a loss on a trade where they were right, they were dead right on the move, but because they went too fast, too quickly with their positions, or they overloaded or they overtraded there, they miss out there. So just be really wary. If all of your spidey senses, for want of a better word, are saying sell, 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 just have a look. If you've been running down, 1, 2, 3, 4, 5, 6, Gann said 7 to 10 days, the market will usually have a pullback from there. It usually doesn't go much further than that without at least a bit of a pullback there. And also, you don't have to take your biggest position right at the extreme top up here or right at the start of the cycle move down. You can get in with a safe trade there, let it run down, let it get you into profit, wait for a pullback like that, and then you can start adding positions there because you can still put a stop loss, back where your average position is up here, wherever it ends up, and then you're trading with the market's money and you can't lose money on that when you're loaded up on your positions there. And then, of course, you've got opportunities. This is not trading advice, remember the disclaimer, but you've got opportunities if you can build a position at the top. It doesn't have to be a huge position, but build a position here. You can add once or twice on the way down, wait for that big pullback to come. And as we go through these 5 or 6 weeks, I will tell you dates that I'm watching for this sort of move, but you can add your position there, add as it breaks through the low there, and then you're off and running. Market runs down, wait for another pullback, have one more crack, and then close the trade at the end of the cycle there, which I think will be in the first week or so of October. Okay, but that's a bit of a dummy run there on Tesla to give you a bit of an idea and a bit of a picture. Yes, big move down, but you can see roughly 3 sections: run down, pullback, run down, smaller pullback, and run down there. I'm expecting a similar sort of thing on the Australian dollar when that kicks off. As that all unfolds, I will be keeping my swing charts up to date. If you're a safety in the market student, that's where I learned swing trading from, safetyinthemarket.com.au. It's one of the best trading skills that I ever learned. It keeps me safe in the market. It also gives me the opportunity to take low risk entries into the market as well. But I line my swing charts up side by side. Gann lined his different time frame charts up. You can see there from his book, The Wall Street Stock Selector. He didn't just look at one chart, like a daily chart or a weekly chart. He looked at all of them and he built a picture around those. And that's what I'll be doing for the next 6 weeks or so as this move unfolds. Now, this concept I call wheels within wheels. I spoke a little bit about that in another video on my channel in the Gann's Gold series, Wheels Within Wheels. You might like to check that out. And there's an example of a wheels within wheels trade there in this video at the top of the channel there, where I show you a 16-to-1 reward to risk ratio trade that I took that unfolded in just 2.5 days on the market. Right. Let's get into the Aussie dollar now. I spoke about this a little bit in the update on Thursday. The market caught me off guard a little bit. Really, I should have nailed this top here. If you look at this top, just below 75% retracement there, there's your first range out, or your first section down, as Gann would call that. And we had 1, 2, 3 sections running up there. Gann said market moves tend to happen in 3 or 4 sections. It was all there. I got blindsided a little bit because my date was for the end of August. We had a nice 50% retracement here. The market ran up. I have actually seen that before, the 50% retracement, then the failed move up there. I talk about this a little bit more in the video there, but 75% retracement. You've heard me on the channel if you've been around for a while talk about that 75% milestone as like a point of no return. So if the market breaks through there, it usually takes out that top there. Now, we may still do that, but that's looking pretty strong. And if you look at that first run down there and you take the pitch of that and you run some angles like a half that pitch, a third of that pitch, a quarter of that pitch. This is just using the Gann fan tool in TradingView. Well, the 1/8, that's another, along with the 75% retracement, that's another point of no return there. And that's where the market made its top there. Now, I've just drawn a trend line through there. The trend line, or the 1/8, would be 2 levels to watch on the way up as we run up this week. I spoke about this on Thursday, around the 27th of August. So that's Wednesday this week. So probably Tuesday, Wednesday, or Thursday is where this top is going to come in. Now, if I've made a mistake, the top would be early September. Okay, but the form reading is what will tell us that. And at the moment, the form reading is looking pretty good. On Thursday, I put out there that I was watching for a low on Thursday. We got that low, the extreme low on Thursday, and the market shot up late Friday night. It was actually early Saturday morning, Sydney time, just after midnight on the Friday night, so just early Saturday morning, but the market shot up there, and you can see you had about 4 bottoms there, and then bang, the market ran up on that news when the Fed chairman was speaking. Now, looking at this run up here, one of two things is going to happen. I think either, as you can see, that's made a double bottom there on this 50% retracement of that massive run down there from September last year, the top there in September, down to the April low there. That's double bottomed on 50%. We've had a rally through there. Maybe we're going higher and we're going to test that 75% there. Maybe I'm wrong about this whole crash thing and we're going up there. That's why you don't just say, oh, Aussie Dollarman said crash, I'm going to go short. I mean, I don't do that. I wouldn't expect you to do that either. But one of two things. If I'm right and if the market is going to go down, and I believe it will, I think you're either going to see a top on a level like this. Okay, you get a price cluster around here, or it's going to shoot through and we'll maybe go to a new high there, double top or a new high up there. Okay, and it's form reading that's going to tell you what that is. Now, the cycles will play a part. The big cycle top I've got for the 31st of August. That's when the top is due. As I discussed in Thursday's video, that's going to link up around either the 27th of August or the 6th of September with a smaller cycle that works in conjunction with that. I think it'll be the 27th of August. Now, how might that look? We've got this big spike up there. That's where people start saying, oh, look, it's double bottoms on 50% there. But so far, it's done nothing. It's just one day up there. Yes, it's one big 4-hour swing up here. So what I would expect is it's got to at least have a pullback and then a failed run up before you can call the move over. But maybe it goes just a little bit higher, has that failed move up. I'd love it if it was on one of these retracement levels or one of these lines down here, but I'll be looking at my swing charts. I'll be looking at, say, the hourly chart as well, and maybe a 15-minute chart and a 4-minute chart as well, and I'll be trying to piece this together throughout the week. Just for fun, I'm watching about 3 a.m. on Thursday, the 28th of August for the potential top there. That's using some intraday stuff that, as I said in the Thursday's video, was actually pretty good, but I'll wait and see what happens with that. But that's 3 a.m. Thursday, the 28th, which would be Wednesday night, Sydney time, the 27th of August. So that would be showing up on Wednesday's bar there. And just as a little bit of confirmation there, have a look at the time of this low down here and this low over here. They were right around 3 o'clock. I won't spend too long on these dates. I covered them in detail in the last couple of episodes. The first one there, I did cross off likely high. I think it will probably be a low there, but we'll talk more about that in next week's episode. We'll see what's happened in the market this week. I also spoke on Thursday about the smaller cycle there. The 21 low, that came in perfectly. 27 high is the next one. And I expect that to be our big cycle high, and for the down move to start from there or around there. And you can see the first run down from there, I'm looking for about a 10-day run down to kick it off, and then maybe a lower top there on September 10, September 11, around there. Now, just a little bit of nostalgia for me. Back 3 years ago, the 26th of August, 2022, was when I entered, just after midnight, when I entered the best trade that I've taken. Now, it was a 56-to-1 reward to risk ratio trade, and it was just this little move from here to here. So a couple of week move there, but it was the first time that I used these Gann cycles from tunnel through the air in advance to take a trade. It was a great trade too. It all just fell together. You don't always get those near perfect entries there, but I got the near perfect entry and the near perfect compounding for a couple of those lower tops on the way there, and I really hammered it on the way down as well. But I just think it's interesting. This was 3 years ago on the 26th of August, and here I am looking at the 27th of August this year for my first attempt at a big kind of law of vibration cycle move there. It's funny, history repeats in the markets, it repeats in our lives as well. And the further you go down the Gann rabbit hole, the more you see that sort of stuff. Now, that move has gone. That was 3 years ago, but we'll see what happens this week if we get a top in the market. Now, where might that top come in? Before we talk about where that top might come in, let's have a look at where the target might be for this move. What you see on the chart in front of you is what's called a highs resistance card. Gann spoke about these in section 2 of his book, How to Make Profits in Commodities, and in a few other places as well. Basically, he's taking the percentage of highs and running them down. This was the all-time high on my data for the Australian dollar, US dollar. I know my data only goes back to the late 80s, early 90s. Early 90s is when the data is good enough to use. But this was the 27 July 2011 high, and the price there was $1.1080. If you ignore the decimal place, it would be 11080. Now, Gann spoke about dividing that into eighths. Well, if we have a look, 50% of that high is 55.40, and we actually hit that in 2020 when the markets collapsed during the COVID crash. I think we're going to at least that level. Maybe we go further, but I think we're going to at least that level. Look at it on the way down. We had double bottoms on top of this 87.5 or the 7/8 level. We broke through, and then we came underneath that level, and then we rallied and we touched that top there. Bang, 7/8. Then we ran down there, only a little top there on the 75% milestone. Then we ran down and double bottomed on 62.5%. Mucked around between there for a while. The high before the COVID crash was just through that 62.5% there. We then came above there, below there, mucked around a little bit. And then last year's big September top, bang, right underneath that 62.5% milestone. And here we are. So the next one, obviously, is that 55.40. That's the target that I'm using. But just, I want to make this clear. I'm not saying that we're going there in the next month. That's the target for this next down move that I see there. It could, take until January, February next year to get to that level. But I'll show you why I think that in just a moment. Now, here was the February 2021 top. That was a big high after the COVID crash low. So we ran up to this point here. This run down here, that is a quarterly swing. So if you're looking at your swing charts, you're using bar charts to construct those swing charts. You've got daily bar, weekly bar, monthly, etc. This is a quarterly swing chart. So it uses the quarterly bar chart, and a quarterly bar chart contains 3 months of data. That's a quarterly swing chart range. And 200% of that, or the octave basically, is 200% running down into 55.40. So you've got a nice cluster there, but look at these milestones of that range on the way down and tell me this market is not respecting those milestones. We ran down, bang, top there underneath 50%. Big run down, big double top, bang again on that 50% there. Okay, they're not calling every flick up in the market, but they're calling big moves there. Well, we ran down, we made a little low there with our January low this year, but we've now run up and bang right underneath that 100%, or as Gann would call it, from this top here down to the 200% there, that becomes a halfway point. And Gann said in the US Steel lesson, tops and bottoms become halfway points in the market. So from that point there, we've made a top there. If we run down from here, that's why I don't think it's going to go higher than that. But if we run down from there, well, that's your target price there. Now, that's two pretty good price milestones close together. And in each case, the market has been giving good highs and lows on these milestones. But let's add one more thing in here. Look at this repeating range here. And you might like to compare this range here with this range back here. Okay, you run that range there, you take it down there, you apply it from that top there, and 100% of that lines up right smack bang in that cluster there. So 55 cents is where I think this market is going. For this run down here, that took about 6 months. What if it takes us 6 months? What if it doesn't get there by October? It takes 6 months. It's still a great tradable move if you can get 1,000 or so points on this market in 6 months running down there with opportunities to compound as well. I won't be holding my short positions until January. I'll be holding them until October and then seeing what happens on the market. Now, we've already seen the market reacting to these price milestones. What else can we do to see if we are locked on to this price target? Well, something that I like to do is I like to take the range that I'm expecting. So from our July top down to 55.40, I just run a Gann retracement tool or a Fibonacci retracement tool, whatever you want to call it there, and I divide that range into those 1/8 levels that Gann spoke about. Now, if we do that so far, we haven't really seen the market reacting to these 1/8 levels, but these are big numbers. If we divide them in half again and we get the 1/16 levels, well, that's where the market ran down to pretty much precisely for that initial first run down from that July top there. It's right on that 81.3%, which is 3/16. So a 16th is 1/2 of an eighth. Then we ran up to that 15/16 level up there, and we've run down to this level again over here. Now, that's not enough for me to say, oh yeah, look, the market's going down here and this is proof, but it's an interesting insight into the market. And I would definitely be watching these milestones on the way down if and when the Aussie dollar does fall down there to see if it is tracking to these levels. I've also taken that quarterly swing chart range and I've run a price target down here and a time target over here, and I've divided that up using angles. Now, that's not quite how Gann used his angles, but it's a really useful technique, and I've learned that from a few Gann mentors along the way. Now, looking at those angles, isn't it interesting? Running down here, the low was around that line there, not quite there, but the pullback was up to this line over here. Basically, that's the pitch that you expect the market to run down at. This line here represents double that pitch, and this line here represents half that pitch. Well, that's where the market ran up to. Now, you can see we're basically hugging that line down there, which is the expected pitch of the move, and that would give us a target of January next year. Now, I'm happy with that. If it takes us that long to run down to 55 cents, so be it. I'll be looking to short this week. I expect that we will see a crash. Okay, but it doesn't mean it has to crash all the way down to that target immediately. If we have a look at the 7, 8, 9 October area where I think this crash is going to run to, that's here. Well, that would be right on this angle here of around 58 cents. So if we're around 58 cents in early October, I'll be closing all my positions, taking a profit there, because quite often what a market will do on the way down, it will rebound between 2 or 3 of these angles. And if we make a low there, and then we run up to say this line over here, well, that's a pretty strong run up. So there might be long trading opportunities there. And then there's another opportunity to get set and back in another short position from that top there and ride it down to the bottom there as well. So you can see I've got that set for late January and around that 55.40 level as well. So now that we've spoken about when and where we might be heading, and I've given you 2 targets there, one for early October, one for late January, but the price target, 55 cents, is where I think that it's going. Not financial advice, but let's just say I've got a couple of US dollar purchases I'm looking to make, and I'll be looking to make those sooner rather than later. Hey, I might be wrong, but as I said, I think that it's going to have a pretty good fall there. But looking at this, I will run, as this market drops, I will run a ranges resistance card from the top there and track all those retracements on the way up. So as the price goes lower, I'll keep running that down. But I'll also be tracking the smaller ranges as well. Now, I've set this one up on a split screen for you. That's a ranges resistance card from the top down to the lowest point of the move so far. And this is only section 1, really, of section 2. So I still think there's a lot more downside in this. But I'll be watching, obviously, these price milestones and the trend line from the top there as well. If we look at this on the 4-hour chart over here, I've run the ranges card just over this top here, down to that low there. And you can see the 4-hour chart running up to that 50% milestone right there. At the very least, I think it needs to have a pullback and then a run up and a failure there. But as I said, from an intraday timing point of view, I'm looking at, this may be running into Thursday morning or late Wednesday night, obviously the 27th of August, or Thursday morning is the 28th. So it could muck around for a little while as well. And again, that's where your form reading comes in. And that's where it's really important to not just jump in too early in the market as well. You don't want to jump in too late, but you don't want to jump in too early either. At the moment, that's showing a lot of strength to the upside. I certainly wouldn't be looking to trade that short on Monday, even though it may go down early on Monday as well. You follow your swing charts, you wait and see. That's only one range up there, one push up there. It'll have a pullback, and then we'll see what it does from there. So I'll be watching these levels along the way. I'll be watching those angles that I was running earlier as well. But most importantly, I will be watching the swing charts as well. Any trades that I take over the next 5 to 6 weeks, and if I don't see a smart trade, which I've spoken about in other videos, if I don't see a smart trade with a small risk entry, I won't take any trades. It's unlikely, but it's the truth. If I don't see a good entry, I won't take it, even if the market is collapsing. It's just not worth the hassle. I don't need to prove anything with a huge trade in a huge crash on the Aussie dollar. I don't need to prove it to you guys. I don't need to prove it to myself. I'm happy with where I'm at as a trader. I'm happy with where I'm at on my Gann journey. Have a long way to go with certain things, but I'm happy with where I'm at, and I'll just be treating these as one of the next 1,000 trades that I'm going to take. Obviously, there'll be a little bit more excitement around them because of the potential there, but at the end of the day, I won't be doing anything different with my trading that I wouldn't have been doing if I didn't have this big picture cycle work in play. So that's all for this video. If you're interested in learning more about the law of vibration, obviously I referenced a video earlier. You can check that out. That's the Ticker Investment Digest article video that I put on the channel. But if you're looking to learn about the law of vibration, a good place to start is the tunnel through the air. These cycles are in there, and some of them are really well hidden. Others are not so well hidden, as I have mentioned in the past. As you familiarize yourself with the book and you put in the work, it's like the universe tends to give you a nod of approval and says, okay, you put in your first 100 hours of work, I'll give you a bit of a help. And help just seems to arrive. It's funny in the Gann field the way that it works sometimes. If you want to study Tunnel Through the Air, there is the audio book on the channel. You can check that out in your leisure. And I know some of you have been following the reading challenge throughout the year, where I said focus on one chapter per week and listen to it several times during the week and just focus in on one chapter at a time. Those of you who are doing that, bravo. That's a really, really good effort, and I know that you'll get dividends from that in future. That's all for this video. If you found some value in the video, and I really hope that you did, but if you found some value, I'd really appreciate it if you could click on the like button and leave me a comment. And if you want to stay up to date with these, I'll be talking about this a lot more. Whether the market goes up, down, or sideways for the next 5 weeks, I will be talking about the Aussie dollar and tracking that along with the other currencies as well. So make sure that you are subscribed to the channel. If you are already subscribed, you don't need to do that again. You only need to do that once. But if you like, comment, and subscribe, it does help me to push these videos out to more people. And in this day and age where we live in interesting times, put it that way, where we have cost of living skyrocketing, and we know that we've got things like the rise of AI coming, which is going to take people's jobs as well. Trading as a profession, and especially with Gann's techniques, is a pathway. It's not for everybody, but it is a pathway that can help people as well. And I am passionate about spreading Gann's techniques, obviously to help people, but also to give due credit to the man who changed my life and brought so many good things into my life through his teachings and through his techniques as well. So again, clicking like, leaving a comment, being subscribed to the channel does help me to grow the channel and push those important teachings out to more people. That's all for this week's episode of the Forex Form Guide. It's almost 1 o'clock in the morning, so I need to get to bed. I'll edit this up in the morning and have it ready for you by 7 p.m. Sydney time. The Forex Form Guide goes out every week on Sunday evenings at 7 p.m. Good luck in the week ahead, whatever happens, up, down, or sideways. I hope that you have a good week of trading, a good learning experience, and that you take it and grow from it and go on to bigger and better things in trading, whatever happens. All the best with your trading. Have a fantastic week, and I'll see you next week on the next episode of the Forex Form Guide. Until then, all the best. Bye for now.